I'm an accountant. I know y'all are all thinking this is going to be very exciting. I'm thinking the same thing. So
I love it.
and I've got all sorts of stuff for you probably one day soon. Basically, what I do, my background, I started with PricewaterhouseCoopers, a big firm on their audit side. Went to a smaller firm. Decided I didn't want to travel as much. Decided I wanted to wear a white hat and be the guy that my clients liked and wanted to have around. So I switched over to tax and did that for 8 years with the private client services group at McGladrey. From there, got recruited back to PwC and decided, you know what, it wasn't audit that I hated, it was PwC. So I excused myself again and started my own practice. And now I'm doing basically what I was doing at McGladrey, which is private client services, focusing on high net worth individuals, small and middle market companies. By small and middle market companies, I've got clients with revenue in the range of $2 million, and I've got clients with revenue in the range of $800 million. So a big range, but generally there's a group of people, a family group, perhaps a family business that's owned by a patriarch and perhaps other individuals in the family. There may be gifts going back and forth, people setting up trusts and things like that. So basically what I did at McGladrey and their private client services group was, instead of focusing on trusts or corporations or partnerships or any one thing, we focused on the group and provided a level of service that you really have to understand the whole structure in order to provide. So if you've got a partnership and somebody gives an interest to somebody else, then you deal with that. If somebody dies, then my job would be to file the 706 and do the 1041s for the estate. If I need to consult with an attorney because I don't prepare the documents, I don't prepare law, I don't practice law, I would call somebody like, Jacob. Call somebody like Jacob and get that taken care of. So that's kind of my background in a nutshell. Now, you know what I do, so why do you want to hear, why do you want to talk to a CPA? So why do you care is kind of what I was thinking about earlier. Why does anybody want to talk to a CPA? And I came up with 3 numbers. Codes. Those are not code sections. So that is the highest marginal income tax rate. This is the self-employment tax rate. And this is the net investment income tax rate. And that can potentially all apply to the same dollar of income. So if you add it all up, you get, I think you get close to 59%. I think it's 58.7%. Somebody can check me. But I think that's correct. So 58.7%. When you start thinking about how much of your money you give away, it's a lot, right? So wow, when my clients come to me with this, they've got a problem. 60% of what I'm earning is going out the door. So what can we do to fix it? And you look at structuring. You look at specific transactions. I had an interesting transaction recently. A guy was selling his company. Big transaction. All of his assets had been depreciated down to nothing. And so on sale of all of the assets, the gain, to the extent you have to recoup it, is ordinary income. So we looked at it and wound up going back and forth in transaction analysis with an appraiser to push the value of the assets down, which had the effect of giving him more capital gain and less ordinary income. We wound up saving $3.8 million. So when you can do things like that for your client because you understand the transaction, because you're knee deep in it, they appreciate having you around. And they go, oh, hey, Eric, I know Eric. So let me call them about this other thing. So that's really the model. The model is to provide proactive, responsive service and to know my clients inside and out, to understand their business, to understand why they're suffering from a large tax burden, and to help them mitigate that. I refer people to attorneys when it's in my client's best interest. I'll refer to other accountants if it's in my client's best interest. I don't try to do everything, but that's what I do in a nutshell. I didn't really have a great speech prepared, but Todd promises that I can ride my bicycle to work if I talk. So I'm kind of the unusual accountant, the long-haired bearded guy that wants to ride his bicycle to work and talk about taxes.
Does he let you park it up here?
Yes,
So
that was the deal.
That's what we're
deal.
negotiating for. So we're
That's
negotiating
good.
for that. But
It's a good deal.
I thought it was pretty fair.
Yeah.
So you've got free time with CPA that I think I've got pretty decent experience. So if you have questions, want to talk about any specific issues that you're having, or general issues, I guess more generally in front of people, if you want to talk about something personal, I can talk to you after. But that's basically the story. There are a few things that small business owners should think about. What a lot of people try to make this number go away by using an S corporation. Is anybody familiar with that tax strategy? So there's a lot of risk involved with doing that. And I generally advise clients not to form an S corporation for the sole purpose of making this number go away. So with an S corporation, you're required to pay yourself a reasonable salary. So when you pay yourself a reasonable salary, you wind up paying employment taxes on that salary. So to the extent your S Corp's income exceeds that salary, it's not subject to self-employment tax, which is, that's where you reap your tax benefit. So to the extent that income is large, if you've got a few $1 million in income, it could make sense to save 1.9%. You're gonna eat most of this. This caps out at the most of it caps out at about $115,000. The Social Security, the Social Security wage base. It changes every year, so I don't try to memorize it.
So LLC is good than S corp, right?
An LLC it can be an S corp. Okay, have you seen the movie Pretty Woman?
Yeah. Mm-hmm.
So there's this scene where Julia Roberts is leaning in the Lotus Esprit Turbo, and Richard Gere says, "Well, what's your name?"
Right.
And she says, "Well, what do you want it to be?" Right there, she was saying, "I'm an LLC," because an LLC can do whatever you want it to be.
Mm-hmm.
So you can elect to be treated as a corporation. By default, a single-member LLC is disregarded. A multi-member LLC is a partnership, generally unless you agree otherwise. You can basically treat an LLC however you like. So a lot of people elect to be treated as an S corporation. But there's risk in doing this. If you don't pay yourself a reasonable salary, the IRS can come in and recharacterize distributions. So you make distributions to yourself from the S corp, and they're not salaries, they're distributions. That's what you're asserting. So they're not subject to employment tax. If the IRS comes in and says, well, you've got $500,000 of income in your S corp, you paid yourself a salary of 0, and you distributed $250K. So we think you owe SE tax on $240K. So just pick a number, whatever the reasonable salary is. So it's much better to, if you do this, pick a salary. So if you're not paying yourself a salary and you're an S corp, pick a salary and set it up so that you're paying a salary from the S corp. Some reasonable number. That reasonable number, I've got clients who are hairdressers, for example, that decided they wanted to be an S corp in spite of my objection. So I said, okay, well, you have to pay yourself a reasonable salary. So, okay. So how much is a reasonable salary for a hairdresser? So if I've got a hairdresser that makes $250K, there probably aren't many hairdressers that make that much money. So what would a reasonable salary be? What does the average hairdresser make? You ask him, he goes, 30,000 or so. Okay, well, what does the average hairdresser make at the best salon in town with the best clients? What are these people that you're competing with, what do they make? 50 or 80 grand. Okay, well, pay yourself a salary of 80 grand, and then you're fine. But you're still eating most of what you would pay anyway in self-employment tax. Your real benefit comes between $80,000 and the self-employment tax wage base at about 118, 120.
Well, this year it's going up to like 124.
Yeah, I think it's going up. So 120-ish. So your benefit is the 15.3% of 40K, right? So you're saving $6,000. And you go, okay, is that really worth it to prepare another tax return and have a lawyer set it up and deal with Eric telling me that I'm a jerk?
No is the answer to that question. I mean,
Right. So it doesn't usually make a lot of sense. Once you exceed the Social Security wage base, you're down to 2.9%. But that 2.9% applies without a cap. So if you've got an S corp with $7 or $8 million of income, and you want to pay yourself a $250,000 salary, fine. You save 2.9% of $1 million, which is a bigger number. So I can prepare a tax return for less than $30,000. Not a whole lot less, usually, but less. So that's the.
So what is the alternative?
The alternative to this structure is paying self-employment tax. Generally, so if you've got SE income,
Sorry.
go ahead.
I was going to say like an LLC, just a regular LLC tax, just as sole proprietorship or as a partnership.
Right.
So the LLC, if you have a single person LLC, the income flows through to you. And is that then all considered income tax? Do you pay Social Security and all of those taxes?
Yes. So 15.3. This 15.3 self-employment tax is Social Security, Medicare, all the employment taxes.
Right, so but that would mean that you have earned all this, right? Whatever came into the LLC, rather than separating it and saying, okay, this was my salary and then this belongs to the LLC.
So an LLC owned by a single member is
Right.
disregarded as an entity separate from its owner. So whatever that LLC does is as if you did it personally.
Okay.
So if you own an LLC and that LLC buys a building, then you just bought a building personally. There's some limited liability protections, and the lawyers can talk to you about that. Single member LLC is not the best limited liability vehicle, but there is some benefit to having some limited liability benefit to having assets in an LLC. When I owned an airplane, I put it in an LLC for that reason. However effective it may have been or not been. But yes, the income of an LLC, if it's a single member LLC, is going to be your income. If it's a multi-member LLC that hasn't elected to be an S corp, it's going to flow through. It's going to be subject to SE tax, self-employment tax. It's going to be subject to income tax. If you materially participate, it will not be subjected to net investment income tax. An S corp, excuse me, S corp income will also flow through, but it won't be subject to 15.3% because you'll get a W-2 from your S corp. So if you have $250K of income in your S corp and the S corp pays you a $100,000 salary, now you have $150K of income in the S corp and you have a $100,000 salary on a W-2. So you wind up paying the SE tax whether the S corp pays half or you pay half. So that's kind of how that works. Your alternative, different structures. You wind up with a partnership, you wind up with an S corp, you can wind up with a single member LLC. So one way or the other, you should, if you have earned income, you should be paying some employment tax, whether it's SE tax or whether it's.
So you're gonna pay taxes no matter what?
Yeah. So
No,
I have
no,
clients.
unless you're a foreign company.
I have people tell me, okay, Eric, I want to start a business. Eric, I want to start a business. I don't want to pay any tax.
No,
What do I do? I said, okay, well, it's easy. Don't make any money. So you won't last very long in your business, but don't make any money, you'll be fine. So,
We have a lot of kids. I have 5 kids.
there you
I don't pay any
go.
tax.
There you go. Perfect.
I get it all back.
Yep. Until you get stuck in AMT. So alternative minimum tax. So heard the additional misery tax. About to call it.
Yeah. So your range of clients is 2 million plus. So do you deal with
Generally.
anybody less than 2 million?
So I've got individuals that high income. People call them Henrys, high earner, not rich yet type of thing.
Oh, that's
so,
good.
yeah.
Looking at, you're talking about taxes, and I'm more knowledgeable, of course, about taxes in Mexico. And even though our income tax rate is a little lower, the deductions here are higher, which is a good ecosystem or a good environment to be in. I just wanted to say that.
It is, yeah. So we do have a lot of deductions available. So individuals, just any individual taxpayer can itemize deductions on Schedule A. So going down to Schedule A, you've got medical expenses to the extent they exceed 7.5% of your income, which is usually people don't get any benefit of that. 10% now, moving it up. You've got charitable contributions, you've got, mortgage interest, property taxes, which you might not get if you're subject to additional misery tax, AMT. Lots of things you can deduct. If you can't deduct anything, if you don't reach the threshold, then the IRS says, well, we'll just pick an arbitrary number and let you deduct that, which is pretty righteous, right? It's pretty fair to say, hey, Janet, you didn't spend any money, but we're going to let you deduct 13 grand anyway. So, okay, cool. So it's pretty fair.
If that's the case, can you carry over those losses even though they made them up? If you would?
So the standard deduction, this fictitious deduction that they allow you to take in lieu of real deductions, can't be carried over. You can't generate an NOL or anything like that. So net operating loss is what you're referring to, and that is a loss from the operations of the trader business. So a lot of people are confused by this and what an NOL is and what it can be. People will take investment losses in a trust and go, oh, well, I have an NOL. Well, you don't really have an NOL because the trust isn't operating a business, so it's not a net operating loss, and you can't really carry it forward. To the extent you do have a net operating loss and you can carry it forward, then that's fantastic. But like Donald Trump, so.
Very good.
So are you available for, consulting? Like if I
I
want
do.
to consult, bring my taxes, and kind of like get your point of view and say,
Absolutely, yeah.
what should be the strategy?
Absolutely, certainly. I mean, we all office here together, and I've got other clients that office in the building. So I went from an environment where I had a minimum fee per client, 10 to 20 grand. It's like, okay, Eric, you can't bring us your friends, or we're not gonna be able to bill them. And come on, it's not really a good deal. And now my friends, they used to ask me, hey, Eric, can you help me with my tax work? And I go, I really can't because my fees are expensive and it just doesn't make sense for you to hire a CPA that's expensive. Go to someone who's less familiar with this. I can't help you on the side because it would be against my agreement with my employer. So now, the big benefit of me having my own practice is that when the guy who cuts my hair says, hey, Eric, can you help me with my taxes now? I get to go, you know what? Yes, I can. Yes, I can. And you know what? We want to come over after and we'll drink a bottle of wine and go ride our bicycles around and goof off. That'll be fun too. So, yeah, I take...
So would you give advice for a bottle of wine?
Sometimes.
Depends on the bottle of wine. Depends on the wine.
The advice might change, no. So,
For the
yeah.
better?
It's
Thanks.
Yeah, so think